Hey everyone, as we're all trying to get our finances in order for the new year, I've got a super important PSA for your wallet. Seriously, you're not going to want to miss this. Let's dive right in. Yeah, of course you are. I mean, it's that time of year, right? We all get totally laser focused on our federal taxes, trying to make sure we've paid enough to the IRS so there are no nasty surprises come April. It's just what you do in your year-end financial checklist. But in the middle of all that planning for your big federal return, there's this one thing, a really common blind spot that can get pretty expensive. It's something that can just sneak right up on you and bam, penalties you never even saw coming. And yep, that blind spot is your state-level tax obligation. I know, it's easy to overlook, but trust me, ignoring it can be a huge financial mistake. And hey, don't just take my word for it. Tax pro Paul Vazquez puts it about as simply as you can. Don't forget about your state taxes as well. It sounds so simple, right? But it's incredibly important because let's be real, the federal stuff just gets all the attention. So here's the bottom line. Just like the IRS, a lot of state governments expect you to pay as you earn. They've got their own set of rules for estimated tax payments, and if you fall behind, well, you can get hit with penalties, even if you're totally squared away with the federal government. Okay, let's make this a little less, abstract. It's one thing to talk about state taxes in general, but let's look at what this actually means with a real-world example. So for this, we're going to take a look at Virginia. Now, like a lot of states, Virginia has its own income tax system with its own rules, its own rates, the whole shebang, and it operates totally separate from the federal system. So in Virginia, the highest tax rate is 5.75%. Now, that percentage might not sound like a huge number by itself, but think about it. Depending on your income, that can add up to a pretty significant tax bill that you really need to be ready for. This basically leaves you with a really clear choice to make. You can either overpay your estimated state taxes throughout the year and then get that extra money back as a refund, or you can underpay and risk getting slammed with a penalty. When you lay it out like that, the smarter move is kind of obvious, isn't it? A refund is always better than a penalty. Okay, so you get the problem. Now what do you actually do about it before the year is up? Don't worry, here's your simple, super effective action plan. Look, the process is really straightforward. First step, check your own state's tax requirements. Super important because every state does this a little differently. Step 2, see if you qualify for any special deductions or credits that could lower what you owe. And third, and this is the big one, if you're behind, make that payment now to avoid those penalties. Seriously, a few minutes of research right now could save you a massive headache later. This isn't just about dodging a penalty. Taking care of these little details, being proactive, and just meeting your obligations, that's a fundamental piece of responsible financial success. It's all about building those good habits. And really, this brings us right back to that powerful idea from Paul Vazquez. He says you need to become an ethical millionaire. Thinking about your state taxes isn't just some boring chore. It's part of the mindset of someone who's building serious, sustainable, and ethical wealth. It's about handling your business, both the big stuff and the small stuff. So as you're wrapping up your plans for the new year, here's the final thought I want to leave you with. Taking the small, concrete step. It's not just about taxes. It's about taking full control of your financial future, one smart decision at a time. So, is this the year you take control?